to start with you because no one really expected Tesla to post a profit in this quarter. They did. How did they get there, and do you think that it's sustainable?
Yes, we think they're getting there because they are in such a nascent market right now that something called Wright's Law is at work. And that says for every cumulative doubling in units produced, costs decline at a similar percentage rate. In the case of Tesla and the auto industry generally, it's been 15%. So it made a lot of sense to us that the cost of the Model 3 came down by $2,000 per car. That's right in line with what we expected.
So they're becoming more efficient, Pierre, but we did see revenue decline in the quarter by about 8%. Is that concerning for a company that really, by and large, has traded as a growth company?
Yes, so I think at this point, revenues, like year-on-year revenues or quarter-on-quarter revenue growth really depends on how the ramp-up of Tesla as a manufacturing facility is stacking up. So it's not a big deal. What's really important is the fact that they produce less than 100,000 cars. Their flagship model, where usually all the profits are down from their peak by 40%. And their new high-volume car is barely 1 year old in terms of mass production. And despite that, they print a high-teen gross margin, which is like leading the pack in the industry. And they focus only on electric. And any other car manufacturer will tell you electric is not profitable yet. So that's where they're onto something. That's where the stock is squeezing up. They're onto something, and the street is now trying to figure out what it is.
And in terms of the street, obviously we've seen a huge reaction today. The stock up more than 16%, on pace for its best day since 2013. But you've also got a company with some of the highest short interest as a percentage of float of any company that's out there. About a quarter of Tesla stock is out on loan, in order to be sold short. So how much can we read into today's numbers, Kathy? Is this more of a just unwinding of some of the short positions that we might be seeing?
Sure. I think the shorts, some of the shorts are covering. They're stretching to make a negative case now. They're trying to figure out, is there some accounting gimmickry here that has caused this upside surprise? And as we dig through the accounting and the numbers generally, if you look at the revenue growth year to date, 21%, unit growth up 65% in an auto industry that is declining. We think total auto sales have peaked. So this is quite dramatic, and I think the shorts are going to be forced to cover as time goes on.
Well, unit growth is fine, but I thought the point was to create a car that they could make some money on, right? I mean, They keep getting cheaper and cheaper. What does that do to the long-term model? Yeah, their gross margins surprised considerably, up more than 300 basis points quarter to quarter. We think, and so they're at about 22.8%. If you exclude deferred revenue recognition and credits, it's still up 300 basis points to 19.7. We think that number goes to 30%, could go to 30% in the next year unless Tesla chooses to cut prices faster than they have been cutting them. And what's interesting about that is, given its lead in battery costs relative to any other electric car manufacturer, every other one will have to, if they want to keep up with Tesla, will have to sell their electric vehicles at a loss. At the same time, they're losing their internal combustion engine-driven business. So it's quite problematic for the rest of the auto sector. Who's closest on their tail right now? Is it Volkswagen, Porsche? Who do you think they see first in the rearview mirror?
I think nobody's close, to be honest. Tesla introduced in the market the Model S 7 years ago. And today, in what manufacturers have on the road or have announced, nothing is matching the 2012 Tesla Model S. And the Model S of Tesla today is actually 40% better than 7 years ago. So that's how Tesla turned from being like a disruptive innovator 7 years ago to actually an industry leader. They have 7 years of experience others don't have, and I don't think anyone is close to them.
And one other thing I'd add is there's another leg to this story. It's really the most important leg. It's autonomous. And we think that Tesla will be or is in the pole position to be the autonomous taxi network here in the United States. The margins, you talk about margins, the margins on a transportation as a service business They're in the 80s. The gross
Why
margins.
is that the case?
Why are they in the pole position?
Correct.
Yes. So they're taking a leaf from Apple's book. They've introduced an artificial intelligence chip that, according to our analyst, James Wang, who worked at NVIDIA for 9 years, says is 4 years ahead of any other auto manufacturer's chip, AI chip. And he would know that because NVIDIA's.
Understood.
Okay. They also have 10 to 12 billion miles worth of real-world driving data.
Yeah.
That is more than every other auto manufacturer combined by a multiple. For example, Google's Waymo has somewhere in the 15 to 20 million miles of real-world data, not simulated. That's not going to work for artificial intelligence.
They've got it in all these cars that are out there.
Absolutely.
Yeah.